Opendoor just closed the Wednesday session at $6.69, ending the day down more than 10% and marking one of the sharpest post-event sell-offs we've seen in a while. And the context here is important, because this wasn't just any normal trading day. This was the first full session after the long-anticipated Warrant dividend record date. It was also a session that unfolded in a very choppy macro environment, where equities across the board were selling off and risk appetite was low. So today's move has two layers to it. There's the broader market, and then there's the Opendoor specific structure that was going to show up whether the market cooperated or not. The first thing we need to recognize is that a 10% drop the day after a catalyst isn't unusual in the world of small cap, high beta, heavily shorted stocks. When you have an event like a warrant dividend, where the mechanics reward shareholders and add pressure to short sellers, there's almost always some degree of repositioning the moment the deadline passes. Traders who bought shares solely to qualify for the dividend often take profit immediately after the record date. Shorts who are waiting for the event to pass before making their next move sometimes press the stock lower. And then you have the opportunistic traders who are simply riding the volatility. When all of that activity collides on the same day as a red macro tape, you get the kind of move we just saw. But it's worth noting that this move didn't happen in isolation. The slide from last week's highs around $9.50 has been ongoing for several sessions. We've essentially seen the stock give up nearly $3 in the span of a week, and that raises two interpretational possibilities. One possibility is that the market was simply overbought at those levels and has now reverted to something more measured. The other is that the price ran ahead of the underlying setup and the pullback is the market's way of shaking out weak hands before the next phase of the story begins. Both interpretations can be true at the same time, but deciding which one ultimately dominates will depend on what happens next. Before we look forward, though, we need to acknowledge something interesting that happened yesterday, and it came directly from Kaz Nejatian, the CEO of Opendoor. In two posts on X, Kaz revealed that Opendoor has now launched its fully self-serve AI home assessment app in several test markets. He said backtesting shows that this new system is actually more accurate than the legacy approach, and perhaps more importantly, it allows homeowners to get an assessment without anyone needing to enter their house. He followed up by saying that the key long-term outcome of this tool, if they tune it correctly, will be significantly higher cash plus offers. That is not a small claim. That is the core of Opendoor's business model: faster assessments, more accuracy, tighter spreads, better pricing, and ultimately a platform that scales. It's fascinating, then, that this long-term strategic update came out almost simultaneously with a short-term structural catalyst. But because the market was so focused on the warrant dividend and the macro pressure, the AI announcement received almost no immediate impact in the stock price. This is the kind of news that gets appreciated later, when the dust settles, and when the market begins to look beyond short-term volatility. There's a world where long-term investors look back on this period and say, the stock fell 10% the day after the record date, but that was also the moment the company quietly rolled out one of the biggest improvements to its pricing model in years. Sometimes the market ignores what matters most in the long run because it's too busy reacting to what's loudest in the short run. Looking at today's price action, the selling didn't have the hallmarks of panic. There was no capitulation spike, no outsized retail dump, no unusual after-hours volume suggesting that something bigger was happening behind the scenes. The stock simply trended lower throughout the day, following the broader market, with the added weight of post-event repositioning. This kind of controlled selling is often what you see when the market is decompressing, not collapsing. And that raises an important question for tomorrow and the rest of the week. After all of this selling, who is left? One of the biggest things to watch now is whether buyers step in once the emotional and mechanical pressure of the record date passes. Yesterday was the last day shareholders needed to hold to receive the warrants. Today was the first day the stock traded without that incentive. From tomorrow onward, the tape becomes cleaner. We get to see the real demand. No more dividend gaming. No more event-driven manipulation. No more traders propping up the stock for the mechanics. If buyers show up now, it sends a strong signal. If they don't, then it suggests that the next leg could continue downward until the next level of natural support forms. What gives tomorrow's session extra weight is the fact that Opendoor is now trading at a price where supply and demand were very active just a few weeks ago. The $6 to $7 zone has repeatedly been an area where the stock either rebounds or consolidates. And given everything happening behind the scenes, this zone becomes even more interesting. If buyers believe in the long-term story, the AI pivot, the scaling improvements, the housing market normalization, the pressure on shorts, then this is exactly the type of level where they tend to accumulate. If buyers stay weak, and the stock can't find a footing here, then it becomes more likely that the momentum traders will continue pressing the price lower. We also have to talk about the short interest dynamic. Short interest in Opendoor remains elevated. The float is still heavily shorted. Borrow costs haven't eased meaningfully. And now that the record date has passed, the question becomes, do shorts take advantage of the weakness and continue to press, or do they face pressure from other sides, whether long accumulation, macro shifts, or simple exhaustion in selling? Short squeezes don't happen because people hope for them. They happen because a small number of mechanical factors align at the same time. Low liquidity, high borrow cost, elevated short interest, and sudden demand. Opendoor has 3 of those already. If it suddenly gets the 4th, demand, the story becomes very different, very quickly. At the same time, we should acknowledge the risk. The stock falling 10% the day after a catalyst is not nothing. It reminds you that momentum cuts both ways. It reminds you that when the market is red, Opendoor amplifies that red. And it reminds you that this is still a company in transition. They're rolling out AI improvements. They're pushing toward better margins. They're experimenting with scalable pricing models. But they're not out of the woods. They still depend on macro factors, housing liquidity, rate sensitivity, and investor confidence. So what would be the best way to position this in an aftermarket video today? The strongest angle is to frame today's sell-off not as the conclusion of the catalyst, but as the setup for what comes next. You want to highlight that the stock closed at 669, down 10%, because of a combination of macro weakness and event-driven repositioning. You want to highlight that this is the first day trading after the Warrant dividend record date, which means the tape is finally clean and the next move is authentic. You want to highlight the new AI assessment rollout that Kaz announced, because that's the kind of shift that affects long-term valuation far more meaningfully than a one-day sale. And you want to frame tomorrow as the moment where we're going to see whether buyers were simply waiting for the noise to pass, or whether the selling pressure still has room to run. Because this is the key point. When a stock sells off into an event, you never know whether it's shaking out weak hands or signaling that the event has been priced in. When it sells off after the event, then the real test is what happens once the mechanical effects fade. That's where the truth shows up. That's what tomorrow will tell us. And that's why the takeaway is simple. Today was messy, but meaningful. Tomorrow is when we find out what the next chapter looks like.